A few years back, I was really frustrated that my tax return showed $300K earned and my bank account showed nothing. So I fixed it with a very simple 5-minute method that I'm going to teach you here. I'm going to show you how to use this for both service and product-based businesses, so watch for that. I'm going to show you how to scale it based on how much income you're making, but this is going to be more geared towards solopreneurs or tiny teams, businesses making under $500K a year, generally speaking, gross revenue. And then I will show you what to do, one of two things to do to fix if using this you still keep running out of money. If you have ever heard of the Profit First method, it is loosely based on that, but simplified so that you don't need a financial degree or 7 million bank accounts to be able to manage it. Takes just a couple minutes, anybody can do it. In fact, I have shared this with countless clients who have all been able to increase their profit margins using this, including my husband, who is a contractor. And in that industry, the standard profit margin is like 5%. And his profit margins right now this year so far are 44%. So if you are running out of money, if you are getting hit with a big tax bill that you didn't save for, if you're getting hit by those annual subscriptions that you didn't save for, this will solve all of that and increase your profits at the same time. It takes a little bit of practice, so be patient with yourself, but you only need a few things in order to do this. Number one, you need about 5 minutes a week. You're gonna need 3 bank accounts, a personal checking, a business checking, and a business savings account. And then the last thing that you're gonna need is the right mindset, right? Just an I can figure this out mindset. And I say that because I know a lot of clients who come into this feeling like I don't know anything about numbers, or I hate math, or this just overwhelms me. I didn't get into business to do the finances. And I get that, but you're smart. You are a smart cookie and you can figure this out. There may be a little bit of frustration or overwhelm, but the more you practice it, it becomes so simple and easy. It really only takes a couple minutes and it really does make a difference. It's going to make you more money. So go into it with that mindset and you will figure it out. So step number 1 is to make sure that every single dollar your business earns, whether you get paid through Stripe, through PayPal, check, cash, whatever it is, you need to make sure that every single dollar is going into a separate business checking account. Nothing is going into your personal account. Everything goes into your business account. This is called your gross revenue. And for our purposes, we're just going to pretend, to make the math easy, you had $100 that week be deposited into this account. Hopefully it's a lot more, but we're gonna make the math easy on me, okay? Step 2 is going to be moving a percentage of this money that you made this week into your business savings account. And I'm gonna go through those percentages in just a bit, but let's just give it a nice round number. Let's say we're doing 25%. So you would move $25 into this business savings account. Now we're moving this in for a couple different reasons. Part of this is going to pay your taxes. Part of it is going to stockpile cash for your slow seasons so that you're not stressed out if you go through a slow season. Part of it is also going to be savings for big investments in your business. You have a big marketing opportunity and you want to put money into it, you'll have that money set aside. That's a crooked ass bank. Step 3 is going to be moving money into your personal checking account. This is what we call your owner draw. Now, we can get technical. You can take out a salary and an owner draw. For our purposes, because I am mostly talking to solopreneurs or tiny teams, I'm going to just be looking at your owner draw. However, if you are an S Corp, you need to also have your money come out as salary, and then extra comes out as owner draw. So a little bit of this will change, and we'll talk about that in the percentages. But let's say your owner draw, we're just going to call it 40%. So this would be $40 of that $100 immediately goes into your personal checking. This is also called net profit. However, We're kind of flipping the script on this because in most cases, your net profit is what is left over after expenses. What we are doing is forcing ourselves to take a profit and then using what is left over for expenses. So in our case here, we'll just say we've got $35 left over for business expenses. Now, if you've ever read the Profit First method, at first when you hear about this, you're like, there's no way, like I'm gonna hurt myself. And this is why these percentages are flexible, and we'll talk about what those look like. But what we're trying to do with this, with what's left over, is force ourselves to justify every expense. So we're no longer just taking a write-off because it's a write-off. We're saying, here's my budget, here's how much I have for the month, and we're making sure that our expenses are lean so that we are profitable. What most businesses do is they spend a lot in expenses because it's all a write-off, and then they don't have any profit left over. We're just flipping this script to force ourselves to be judicious, to be very careful with our business money and make sure that we're not wasting anything. Now, a lot of people will say, yes, but this can force you to not have money to invest in growth. That's what this is for, right? We have set aside, ideally, more than we need for taxes. We're building up that security fund for our slow months, and then we're building up those extra investments. Does that mean that you can't take from your profit sometimes to invest in some big marketing opportunity? Of course you can. It's your business. You make the rules. You do whatever you want. You adjust these percentages however you want. You take as little or as much profit as you want. We just want to make sure that we're not falling into the trap that most people fall into of constantly spending in the business, but not creating the financial freedom that we got into business for in the first place. Okay, so what is the difference between a service-based business and a product-based business then? We get to add a step in between here. We're going to call it 1B. And this is where we're going to take out money for your cost of goods sold, or COGS. Cost of goods sold are different than business expenses. Business expenses you have to pay month over month whether or not you have any sales. Cost of goods sold is the cost of what you are selling. So if my husband's a contractor, if he buys materials for a job, that is a cost of goods sold. He does not incur that cost unless he sells that job. So unless you have either subcontractors who you are only paying if you have a job, this is not the same as employees, or you have materials or things like that go into the thing that you are providing or selling, you don't have this step, right? If you are a service-based business, but your service relies on materials, you do have this step. So what we do with this is we actually minus out whatever our cost of goods sold were. So let's say for this example, we're going to minus $20. What we then have left is what's called our gross profit. So let's move this. This now is what we are taking our percentages from. So right off the top, we're kind of looking at this as it's not income, it's an expense, right? It's a COG, a cost of goods sold. So we take that right off the top, and then we look at this. Now, you could kind of look at your credit card fees as a cost of goods sold. You don't incur those fees until you actually sell something. And so when I'm talking about what's hitting your bank account, this is minus your credit card fees, right? Stripe already took it out and then they deposited that $100. So your gross profit is then whatever is left after that credit card fee. And so it's kind of the same principle, but when we're talking about it in terms of like traditional cost of goods sold, we're then taking all of our percentages from this number. So we're taking the percentage from our savings and taxes from this number. We're taking the percentage for owner draw from this number. Now I'm going to get into percentages in just a second, but go ahead and hit the like button if you are finding this useful so far, if it's making sense, or if it is not making sense, drop a comment, let me know, and I will personally do what I can to answer it. Although, if you get into very complicated questions, I'm probably going to send you to your CPA, just so you know. Okay, let's get into percentages. Number one, the percentage that you should take is based on rule number one. It is your business. You make the mother-loving rules. So I'm going to give you some recommendations that are loosely based off of the Profit First method. I'm actually going to pull up a Profit First graph and what they recommend so that you can visualize that if you want to pause that and take a look at it. But I'm going to show you a simplified version for solopreneurs or tiny teams, people generally making up to 500K, that will help you to simplify this for your brain and actually make it feasible for you. Okay, so let's assume that you make less than 100K a year. I would recommend that you set aside 20% of every dollar you make, so 20 cents out of every dollar is going into savings for taxes, for security, for whatever it is you want to do. Then we are doing 40% for owner pay. If you are an S Corp, this should probably include your salary. I would not put your salary over here. I would put it over here. So 40%. So let's say your salary is 30% of this. You're going to take 30% and leave it in your bank account, but then take 10% and take it out as your owner draw. So this is what will be transferred to your personal account. And then for expenses, we have 40% for expenses. Start with these numbers, see how you like them, and adjust them based on how you need to adjust them. Okay, so now let's say you are making between 100 and 250K a year. The percentages that I would recommend here are going to be 25, 35, and 45. Again, remember, this is based on percentages. So your profit is still going to go up even if your owner pay percentage goes down, simply because you have more money to draw from. Okay, so then what if you are making 250 to 500K? This is going to be a little bit different. We are going to do 25 to 30%. This is going to be based on your local tax rate. So make sure you talk to your accountant and get a more accurate judge of that. Owner pay will also be 25 to 30%. And then the remainder, whatever these land at, the remainder will be your expenses. So let's say you're doing 25 and 25. This means 50% is going to expenses. And this is because it takes money to make more money. No matter what you try to do, you're always going to have more expenses as your business grows. And so working off of percentages really helps you budget for this well, still making sure we're taking that profit, but making sure we have enough to grow the business also. Now, I'm going to talk about what to do if you start implementing this and find you have no money still. But first, I want to remind you that this can be a lot to wrap your head around. So watch this section multiple times. Play around with some actual numbers yourself. The more you play around with it, the more you're going to get the hang of it. So what do you do if you are doing these numbers and you're doing it for a few months? It takes a couple months to kind of get into the groove and make sure you've got expenses covered, maybe even up to a year, to remember all of those annual expenses and making sure we have all of those covered. If at that point you still are not able to make these numbers work, there's a couple things you could do. You could adjust the numbers, but more than likely there's one of two things you need to fix. Number one is your expenses. You are probably spending a little too willy-nilly. You are probably having too many write-offs, and it is draining your profit. So I would go through, audit every expense. Maybe there is an upgrade that you need to make to a subscription or an insurance company or whatever it might be. Look at your rates, look at what you're spending, look at the technology you're using, look for any overlapping subscriptions, and do what you can to spend less here so that you can make more here without trying to keep this so low that you really can't run your business, right? We still want to be investing in things that are going to save us time and make us more money. So be mindful of that, but look for overlapping subscriptions and wasted money. The second thing to look for is if you can't make this work, if your expenses are as low as they can be, you're paying your taxes, you've got all that, and you still don't have enough profit, this means that you are not charging enough. And I know that that can be a whole other topic to wrap your head around. I actually have a free profit first pricing calculator that you can get in the description. I would recommend that you go through that because it takes into account things like taxes and your COGS and your expenses and all of that. Oh, you know what I forgot to do? I forgot to mention that this is your gross revenue or your gross profit if you have COGS. If you have COGS, this is the gross number that you are taking from. If you do not have COGS, it is the entire revenue that you are taking from. I hope that makes sense. I want you to remember that this is level 1 of small business money management. This is just to help you make sure that you have money for taxes, that your expenses are not too bloated, and that you're making money so that you don't burn yourself out working for free. As you grow, you can get into deeper methods, or better yet, you might have enough profit to be able to pay somebody else to do this kind of work for you. Hashtag goals. Comment to let me know if this helped you or if you have any questions. I would love for you to give this a thumbs up. That helps me a ton. Be sure to also subscribe if you would like more advice from an accredited small business consultant specializing specifically in solopreneurs and tiny teams. Please share this anywhere your business community is hanging out. That helps me a ton. And remember, it doesn't have to be perfect for it to be profitable. Fist bump in the comments if you watched to the end. You got this.